Hey everyone, welcome to the Walk to Wealth podcast. If you're tuning in on any of the podcast directories or on YouTube, make sure to subscribe, make sure to follow so that you never miss out on another episode or so that we can keep on bringing super high quality guests like our good friend Robert that we have here today. Robert, for anyone that may not know you, tell us a little bit about yourself. What's your elevator pitch? Who are you? What do you do?
Sure, yeah. So my name is Robert Persichitte. I help my clients keep their money by avoiding ripoffs, scams, mistakes, and taxes. I was an auditor for about 10 years. I am a certified fraud examiner. Basically, kind of think of it as I'm an auditor on your side. So if something is feeling sketchy or you're unsure about something, I help my clients get to the bottom of it, figure out what's going on, and then figure out how that fits in with their goals, fits in with everything else to make sure that they're not getting overcharged in taxes or not making any big mistakes with their money.
Yeah, and so Robert, take us a little bit back to the time machine. Tell us where your Walk to Wealth all started. Where did this journey all begin before the success, before you've been able to accomplish all that you have so far?
Yeah, so back when I was in college, my very first accounting class, I went to school for accounting. Very first accounting class, I had a teacher who was great, and he asked me, "What do you want to know?" And at that time, Enron was dominating the news. Huge.
Quick question for anyone that may not know what Enron is. What's Enron?
Yeah. So Enron is one of the biggest financial scams ever. It was a huge company. They were an energy company primarily, and they made power plants. And just one day, this huge energy company that everybody thought was a rising star was going to take over the market. The stock price went from $90 to $40 because the CEO sent out an email that said, "We don't have any money. We're completely out of money." A few days later, people got to the bottom of it, went from $40 to $0 because they were lying. They lied about the income coming in. They lied about the money that they were making. They lied about everything. And it was a huge shock to everybody. How could this happen? How can this giant company that we've invested in, that's had these predictable stock returns, how can it disappear? What happened? And if you want to learn more, The Smartest Guys in the Room, it's a great book. There's also a movie about it. But people talk to me all the time about accounting is boring. And that always puzzles me because I look at Enron. You have these people on the phones calling, cussing out investment analysts. You have executives going out to strip clubs, buying cocaine with the company money, going to all these huge, crazy parties, doing all these crazy, huge, over-the-top things. And you're telling me that that's boring to you. I don't understand it. Why is that boring? What is your life that is so much more exciting than that I'm not getting here? Crazy stuff going on. But I wanted to know what happened. How does a huge company, one of the biggest energy companies in the world, how did it disappear? Where did it go? What happened? Why was it there? And I really gravitated towards fraud, and I really gravitated towards how does this happen? How does a Ponzi scheme work? How do people lose their money? Why is some things illegal and some things aren't? Why is, Elizabeth Holmes with Theranos in prison, but the people who made these really ambitious claims and goals about like electric car companies, why aren't they in jail? What's the difference? And those are the types of questions that I always wanted to answer. And I got my first job. I was working for the courts for the Economic Crimes Division. And it was my job to go find the money. So these people stole from whoever, from the state, from their loved ones, from investors. And my job was to go in and find out, where did that money go? Loved the job, loved everything about it, but the pay was terrible. They paid almost nothing. So while there are some very dedicated civil servants, I decided, I am not that dedicated. Did a lot of auditing, did a lot of different types of auditing, did a lot of analysis. And now I just want to use those skills, help people out, help people avoid those scams in the first place.
Yeah. So if you don't mind me asking, let me ask you a couple questions about the idea of money, right? What was that like kind of growing up in your household? Because as you said, you kind of knew you were dedicated, but not dedicated to be a silver servant's faith. But you always had I feel it sounds like you always had an idea that you should be paid what you're worth, right? In terms of like the value that you bring. And clearly you providing more value than that civil service job could pay you. So you went out to seek other opportunities, right? But tell us, what was kind of like money growing up? And you said you had an interest for accounting. How did that evolve? How did you cultivate that? Did you always know you wanted to get into that field? What was it like before college?
Yeah. Well, I grew up, my mom had me when she was 18 years old, single mother. We did not have a lot of money, but I had a really big family and I was like the only kid in the family. So I was kind of spoiled and I had a lot of opportunities to spend money, even though there wasn't money in my household. And my mom did a really good job from a young age telling me what money was worth and making me understand what kind of things were expensive. And anytime I liked an expensive thing, she wouldn't just cut it out of my life entirely. She'd say, you have expensive tastes. You better make this work. And going way back, I sang when I was a kid and I was pretty good at it. I was in a couple of operas. I was in a couple of theater performances. And in high school, I said, I want to be an actor when I grow up. I want to be a performer when I grow up. And my mom gave me one of the best money lessons that I ever had. And she said, great, let's see what the job is. And she took me out to open casting calls. She took me out to doing that job and doing what actors do and doing what musicians do, trying out, auditioning, trying to get things. And I learned very quickly, one, most of the jobs out there pay like nothing, very, very little. And two, it's a lot of really hard work that isn't necessarily the fun work that I imagined. So that was my best money lesson as a kid of things cost money and you have to earn that money somewhere. You got to do something for it. And so it was very important to her, being young, being a single mom, to strike that balance of giving me opportunities when she could, and then being realistic, getting your feet on the ground and knowing what the world is like.
Yeah. And then so in terms of like the accounting, when did you think that came into play? Because you wanted to go to the singing route, the, musician, actor kind of route, and accounting, at least at face value. I didn't know about the cocaine lines and the massive parties and celebrities and everything. But from accounting and singing / acting, it kind of seemed like two completely different industries. What made you make that switch? How did that switch transpire?
Well, it's back to what my mom always taught me. And I knew it as a senior in high school. And I looked and I said, I want to make money, right? I want a job that pays a lot of money. So I went and I looked at the different jobs out there. And the first two jobs were engineering jobs. And the college I got into didn't have an engineering program. So I said, I'm not going to do those. And number 3 on the list was accounting. Number 4 on the list was finance. Now that's probably changed. This is a long time ago. But I said, well, if you can make a lot of money doing accounting, then I'm going to try to do accounting. That's what got me there. That's what got me in the door. And then fraud is what got me to fall in love with it.
Amazing. And so let's get right into the fraud. What is essentially fraud? What is a Ponzi scheme? What are some like typical frauds that people, are the victims of in this day and age that you're seeing on your end?
Yeah. So I think a hard concept for a lot of people, and I alluded to it earlier, what's the difference between fraud and an investment? Like what makes us say that this is a scam? Because investing in Ponzi schemes sound pretty similar. I'm going to give you some of my money and then you give me back more than I put in, right? It sounds kind of irrational if you haven't operated in that world, if you haven't lived in that world. And first off, I'm just going to briefly touch on finance theory. Why do people need to finance things? And I like to think about it in terms of a delivery company, right? Very simple example. You're big, you're at capacity, you have so many customers that you can't service them all. So what you need to do is expand. How are you going to expand? You're going to need more trucks. You're going to need more people. You need to get out there and actually do things. Hiring people buying trucks, buying stuff to make your business bigger all costs money. And so we have to get it from somewhere. We borrow it. The reason banks are willing to let us borrow money, the reason that investors are willing to let us borrow money is because we are taking some money now to give back more money later. At the heart of finance is money today is more valuable than money in the future. Money, cash in my hand is better than a promise of cash. It's better than a promise of more cash. Cash is king. It is the center of finance. Now, some people figured out this is a Ponzi scheme now. I don't have to actually improve my business. What if I just continuously got a new stream of investors and I just took their money, spent it on cocaine and strippers, and then when it was time to pay them back, I just got a new investor and I paid them back with their money, right? So the difference is a legitimate investment is paying for things with their expanded business. It's paying for things with their new profits, their new revenues, the work, the thing that they're providing. A Ponzi scheme is paying people with new investors and new investment funds coming in. Now, the thing to think about, a business that grows bigger can pay people back with those future profits. A business who relies on new investors always has to get new investors, and they always have to get more investors. They constantly have to get more to pay back the old investors, and it gets bigger and bigger and bigger until it's unsustainable and collapses.
So then when you're being offered the opportunity to invest in some of these things, sometimes it's a little difficult to, decipher, what's going on and pretty much figure out who's what and what's what, especially if it's like a startup company or a company that has some promise or a company that says they're doing XYZ and here are the returns. And some KPIs, some, aren't weighed the same. So it's like, yeah, I'm making a ton of revenue, but my profits are negative, right? So like there's things like that. So it's kind of hard for someone who doesn't really know much about investing to kind of differentiate between the two. What are some things you kind of look out that anyone should look out for when presented an opportunity to get into an investment?
Number one question, and you just got to think about this from outside of yourself. And anytime someone's giving you an investment opportunity, you always ask, what is in it for them? What are they getting out of the deal? And that'll help you think through, right? In our legitimate example of a delivery company, what are they getting out of the deal? Well, they're getting new employees and they're getting new trucks. That is their end of the bargain. That's what's good for them. What am I going to get out of the deal? How are they going to pay me back? How is this going to work? Well, the new trucks, the new employees are going to allow them to make more profit. That's how they're going to pay me back, right? This can kind of be a mix in the middle too. So like, let's say that there's a broker in the deal and they get a huge commission, right? They're trying to sell me stock or they're trying to sell me an investment in this delivery company. What's in it for them? Well, the huge commission is what's in it for them. They're getting paid to bring in that money. So they're getting some of my money up front just for convincing me, just for making me make this decision. Now, does that mean what's in it for me? Nothing? No, it doesn't. It means they're taking a little piece of that. You still have something that you can get back. Just every time, think about what's in it for me, what's in it for them, because there is nobody in this industry, not a single person that is doing it purely out of the kindness of their heart. And there are no little kids who dream about being accountants. They dream about making money in accounting, finance. Those are the ways to get there. And so really look skeptically and say, why are they doing this? Why are they at my door? Why are they willing to promise me so much back in the future? And how are they going to pay it? How are they going to pay it? And it's really, like I said, thinking outside yourself, putting yourself in their shoes. What's going through? What's going through their mind?
And so now tell us a little bit about, so we kind of asked the question, let's say we present an opportunity and now we asked them, what's in it for us? What's in it for them? What are some answers that you should look out for? Because that's when it comes to, sales, a lot of trained professionals, if you're not practicing, they understand psychology. They have a way with words. They're like that smooth talker at the bar that can go and talk to any girls and pick them up. Doesn't matter how good they look. They just know how to use their words and know how to evoke emotion to get people to buy, to get people to sell. These are trained professionals, right? So what are some things you kind of look out for when you're hearing these answers, because a bad answer can sound very, very nice in the hands of the right talker, right? So if someone knows how to have the way with words. So what are some things you should kind of look out for aside from like key metrics within the actual business in terms of like business models?
So my favorite, and this comes down from being an auditor, and this is how auditors dissect situations. Ask why at least 5 times. Keep asking questions. Don't take that first question. And there's a really good story that I love about this, and it's related to Enron. There was an analyst who on the earnings call figured out the scheme pretty much before everybody else. And he said, I don't understand how you guys make money. Now, the CFO of the company thought he was muted on the phone and said, this guy is an asshole. And asking questions is what got him labeled as an asshole. And Enron's whole marketing up until that point was ask why. A lot of people put it out there, kind of an original meme back in the 90s. Ask why, asshole. When it's a house of cards, when you don't have that, it's really hard to come up with those answers. What scammers and bad salespeople try to do is make it sound like it's so confusing that nobody could possibly understand that. That's why Enron, they label them the smartest guys in the room. They don't have to explain anything to anybody else because they're so smart. They know everything and you know nothing. That's a terrible assumption to make. That's a terrible assumption. And if you don't understand something, they don't deserve your money. It's their job to explain it to you. It is their job to make you understand it. And if they can't do that, they're either ripping you off or bad at their job. And either way, they don't deserve your money. So ask those questions. And when you get that follow-up answer, it's going to be smooth. Just like you're saying, it's smooth. It's polished. They worked on this a million times. They have trained to get you to say yes. What they have not trained for is for you to say, how does this work? Or what about this? And if their response is, don't worry about it, you don't need to understand that, or I know better, or this is really complicated and I can't walk you through it right now. Again, they're either terrible at their job or ripping you off. One of the two.
Yeah. So then let me ask you, because you said if you don't understand what you're investing in, you shouldn't invest in it, which I 100% agree. That's one of the principles I got from Richest Man in Babylon that I still follow to this day. But in terms of understanding, what level of understanding should you achieve before you say it's okay, let me put my money in? Because at the end of the day, some of us may not want to be traders. So it's like, why go and spend 1 to 2 years trading, right, to become a trader before I start investing? Or for example, real estate, why should I have to go buy 100 houses to invest in one property, right? So it's like, what level of understanding should you reach before you could say, yeah, you're understand enough to invest in it without having to spend years reading and looking up? And because that takes time, and a lot of the times we're going to spend all that time and effort, we might as well get into that as a professional ourselves. But let's say we have another job and this is our career. How do we invest in an asset class? What level of understanding should we seek?
At a bare minimum, at a very bare minimum, you should be able to ask, how are they going to pay me back? How am I going to get my money back? And if you want to take it a step further, really dissect what assumptions are they making? What do they think is going to be true? Especially with speculative stocks, we have to answer those questions. So I'll bring up an example of Tesla. I am not saying that Tesla is good or bad. I'm not saying it's a ripoff. This isn't investment advice, but let's look at some of the assumptions about Tesla, right? We can look at how much they charge per car. We can look at how much they earn back per car. And then we have to start asking questions of, do we think 1/3 of all the cars in the future are going to be Teslas, right? That's what the market seems to think. That's what those valuations seem to push out there. So for every Chevy, every 3 Chevys that you sell, you're going to be selling at least 1 Tesla, right? For everyone out there. Is that a reasonable assumption? Do we think that's going to be true? If you think it's going to be true, well, maybe it's a good deal. If you think, no, there's no way, well, then you have to say, well, how else are they going to make their money? How else are they going to pay me back? How else is that going to get paid at some point. Now, to know what those assumptions are, to know what everything else is, I like to trust experts. And so I always go and start with a trusted news source. One of my favorites is Morningstar. So Morningstar will tell you exactly what the assumptions are, exactly what, so they'll have bears say and bulls say. So the bears are the people who think, no, they can't justify this valuation. And they'll talk about some of those assumptions that they think are false. They have what the bears say, why they think those assumptions are true, why they think those guesses are true. And you can read that, think about it, and then make a decision based on that. And now that's for an individual stock. There's also analysis for things like a mutual fund. And the more layers that get between you and a stock, the higher your fees are going to be. So you could find a investment analyst that you trust, invest with them. They'll invest that money for you. Here's the thing. One, you got to make sure you trust them first and foremost, but they're going to be charging you something. They're not doing it for free. You might have a mutual fund in between. They're charging you something. They're not doing it for free. And you have things that eat away at your fees that you just have to be aware of. I like to give the analogy of like landscaping. Can I mow my lawn? Am I capable of mowing lawn? Yeah, I am. Would I rather pay someone to do it? Also, yes. I just don't want to spend the time and energy to do it. So even though there's a fee involved, even though I'm paying somebody to do it for me, that's still a good deal.
Yeah. And so then let me ask you, because I know there's, especially with Fidelity, they have some that I'm invested in, but they have some index funds that are zero fees. When you hear zero fee at face value, it's like, at least from this advice, it seems like, oh, is it a scam? What's the difference there? Have you been seeing like scams with index funds as well?
It's really hard to pull off a big widespread scam with an index fund, with that type of thing, because it's very regulated. That's the right thinking, right? If they're saying, so like Fidelity has zero cost direct indexing, they offer that. We got to ask what's in it for them, right? For Fidelity's model specifically, you can break it down and it's coming from the clearing houses. So you want to buy stocks, there's somebody else who wants to sell stocks, and the clearinghouse's job is to match those people up. So Fidelity is providing people who want to buy stocks for a fee. You can look at other places like Schwab, on the other hand, they make money off of idle cash, right? So they have a lot of low fee options. They will charge your account. They'll earn interest off of your money, but they won't give it to you. They'll keep it in their pocket, right? So we got to ask, is that a scam I'm okay with? Is that a scam? Is that a ripoff? How are they getting paid? Why are they doing this? I think the biggest one that a lot of people have been looking really closely at, including the SEC, Robinhood, zero fees. Why are you guys charging zero fees? You don't have the cash products like Schwab. You don't have the market share like Fidelity. Well, in some cases, it turns out, well, it's because they were executing the trades not in the best interest of their customers, right? The customers were overpaying for stocks. Now, is that a fee? I don't think we could call it a fee. You overpaid for something and that went in Robinhood's pocket. Again, am I okay with it? Everyone's going to get paid. I personally like to go with transparency of saying, hey, I'm going to pay you this much to do this work, and I can see everything here. We can drill into it. We can, especially with the brokers going on right now, they're really fighting for business. And so they'll subsidize things for now. Who knows if they're still going to be free 10 years from now? And then you have to make that decision. Do I switch? What do I do? What's going to happen?
So let me follow up on that, because we have Robinhood, we have Webull, we have M1 Finance, we have God knows how many more there are, but with all these no-fee trading platforms out there, is there such a thing as like a good scam, I guess you could say? How can we protect ourselves there? Because it seems like everyone at this point in time is just offering no-fee trading platforms.
Well, and scam or a fee or a charge. I used to say for my business that I help people avoid fraud. That didn't work out very well, because most of the things that I saw, well, it didn't meet the textbook definition of fraud. They were ripoffs. They were bad deals, but that doesn't mean they're fraud. And you go back to like the car, you're going to buy a car from a dealership at some point, they're getting paid. They're marking it up. what's your alternative? What are you going to do? Are you going to walk into the New York Stock Exchange and with a trade ticket, like, I want to buy this? Like, nobody's going to do that. So our job as a consumer is understand, how are they making money? What's going on there? And there's some platforms where you can see the differences. There's some research that people have done where people on the one that I saw specifically was people on Schwab were comparing their quoted price to people on Robinhood, and people on Schwab were getting a better price. That pushed the government to take actions. That pushed the government to file a suit on the consumer's behalf against Robinhood. Robinhood had to pay out a settlement because they weren't doing the right thing. So really understanding how is the real trick. Understanding why are they doing this? What's in it for them? And sometimes you just have to accept it every car dealer is going to be charging me a markup and I don't have an alternative. I'm not going to go down to GM, knock on the door, like, give me a Chevy. Nobody's going to do that. That's not ever going to happen. And it's the same with the brokerages, but you got to kind of weigh it out. Hey, is this trading fee that I'm paying through, just throwing out an example here, not a recommendation at all. This trading fee I'm paying through Interactive Brokers, is that worth what I'm getting from them? And are they giving me the best deal possible? That's going to be different for each person, but really understanding what are they getting out of the deal?
Mm-hmm. And so then I wanted to ask you another question, because another commodity that everyone is talking about now, especially my generation, is like NFTs, crypto, that whole space. And there's constantly things going on there. Literally, I was playing basketball last summer, and one of the guys I was hooping with, I went to high school with, he was like, yeah, John, he was trading cryptocurrencies, and he was doing pretty well actually. He lost some money, but he was doing pretty well just from trading. And then he was like, yeah, so we put a lot of money into this one crypto startup, and then they ended up freezing the accounts, and then no one got their money back. And then long story short, he lost, I forget how much, I think like $1,000 or something like that. But he lost a good chunk of change. So what are some frauds there that you're probably seeing and that you could help our listeners look out for? And because it's a new hot topic and everyone got their eyes on cryptocurrency.
Well, the one that you're talking about, first of all, when we look at it, I won't say it for fear of getting sued. I think we all know what it is.
It's surprising. It actually wasn't, though.
It wasn't?
It wasn't. It was something else entirely. Yeah, it was. And I'm assuming you're talking about the one that starts with the letter D, right? That Elon loves. But no, it was actually something else that he got scammed on and lost his money. But that's a whole nother one as well.
So we got to ask ourselves, where am I getting my money from? Where am I getting paid back? So let's talk about our pal, Elon. A lot of people accuse me of being an Elon hater. I don't know. The guy is clearly much smarter than I am, right? Off the bat, I'm humble enough to realize he is much smarter than I am. Do I think he has my best interest at heart? Hell no. He is not looking out for me. So that one I will talk about because I got hard facts about that one, right? So I think what we're all talking about on that case was Dogecoin. Dogecoin is a joke. It's literally a joke. And if it's literally a joke, they copied and pasted old code from the Bitcoin blockchain and said, hey, this is a joke. Here you go. And it got big because Elon said, we're going to start accepting payments in Dogecoin. And then everybody bought in. When people bought in, that made the price of it go up. And then for some reason it went down. And people who know finance know what that reason is. You can look at Tesla's financial statements. We know for a fact that Tesla bought in. They have to include that in their financial statements. We don't know what Elon did. That's a mystery. Some people have speculated, some people have guessed, but he doesn't have to tell us because they're not regulated securities. We know that Tesla made at least $100 million off of this deal by buying Dogecoin very low, riding it up and selling it at the top. And then it went back down over a joke, over SNL, right? How Elon made his money, how Tesla made his money, very, very clear. Buy low, build up excitement, get people excited about this investment, Their excitement, their money that they are paying from their pocket drove the price of this up, and then sell high once the price has gone up. Now, once they started selling, the price starts going down. It doesn't have that hype and momentum. They are taking money. So when you're buying your $400 Dogecoin, you are buying it from the richest man in the world. He is selling it to you at that price. And now you have to decide who's going to pay me more? Who is going to buy into this at a higher valuation than what I have bought into this at? And for something like Dogecoin, especially, so the one that I'm thinking of that I won't name is a lot of these crypto lending platforms where you deposit your crypto and they're going to pay you an outrageously high interest rate. They were promising a 17% interest rate. Now, most finance experts immediately have red flags going off because that is too good to be true. How are you going to pay it back? How are you going to pay back a 17% interest rate? Where does that come from? And the answer was it comes from future investors. Now we know that's a Ponzi scheme from earlier. If I get my money back from future investors, that's a Ponzi scheme. And once the investors dry up, the investment collapses. It's not an investment. It's a scam. We got to ask ourselves these same questions. And I think the thinking that goes into crypto so often is this is going to replace money. This is going to replace currency. And just like a fiat currency, the only thing that gives it value is the fact that everyone believes it has value. Now, I'm willing to work for US dollars because the stuff that I buy, I'll tell you the expensive stuff. I like all the newest Apple products. That's my thing. That's where my money goes. I know that I will be able to trade my dollars for Apple products at a reasonable rate. And I'll be able to go in and say, okay, what's a new MacBook cost me? Okay, I need to work for this many hours. That's going to be worth one MacBook to me. If I got paid in Bitcoin, I don't know, 5 hours, 1 hour, 30 hours, it changes from week to week, right? So think about this. If you're in charge, put yourself in the shoes of imagine you're Walmart, right? And you're a believer in crypto and you say, you know what? Bitcoin is going to replace US dollars. What kind of stuff do you need to do? What steps as the CEO of Walmart do you need to take to make that a reality, right? Well, first, you need to go and upgrade all of your systems. Instead of that credit card machine, it's now going to be a Bitcoin machine. Well, can it mine it fast? Can we process the transactions fast enough? Well, no, because it's not as efficient as traditional transaction processing. It takes 20 minutes for a transaction to go through. Well, we need to now build a bunch of infrastructure for that to happen. Okay. I get my stuff from different countries, different vendors. I now need to convince them that I'm going to pay them in Bitcoin. I need to convince them of that. I need to answer these questions of my employees. Are they going to start accepting Bitcoin instead of money? All those questions need to be answered. We can't flip a switch and get rid of the US dollar, even if everybody thinks it's a great idea. It takes work and effort. And before buying into a currency that you think is going to be the next US dollar, say, what has to happen? How am I going to get paid back? And why would the CEO of Walmart do that? Why would they put in all this work to make me rich unless they had something on the line? Everybody is in it for the money. Everybody is looking out for that piece. And so a lot of these things off of that, I've heard it referred to as the greater fool theory, relies on somebody else paying more than you paid for it. Now, here's where it gets a little tricky, because there are some things that are legitimate out there. So like staking your Ethereum is one example. There's economic value that you are providing. You are creating a new thing. Smart contracts have economic value. What the finance industry is having a really hard time with right now is how much economic value? How much are we going to be able to get out of it? And can we justify 20, 30, 50 billion dollars on certain blockchains to get that money back? Are there going to be $50 billion of smart contracts in the next 10 years? I don't know. Maybe. If you think the answer is yes, that one might be good. Now, if you think, is somebody going to be a bigger sucker than me and pay more for this for no reason, then it's probably a scam. You have somebody else trying to get it back from you.
Yeah. So then here's another question I wanted to ask you on the topic of like staking, and also on the topic of, the hype, right? So how can you kind of differentiate the hype and things like that from an actual stock going up in its evaluation? Because a lot of the times, as you mentioned earlier, you can't go downtown and go on to Chevy and ask, hey, can I get a car? You also can't go down to Chevy and say, hey, let me see your financial reports, right? It's not like you can just call up the CEO and you're like, hey, how's the company doing? It's like, where could you find this information so that you can kind of figure out how is this company actually doing so that I can make an informed decision?
Depends on how deep you want to go and how much time and effort that you want to spend. So there are people out there that have gotten really, really creative, and the job is a financial analyst. And what they're doing is they're making guesses and projections about the future of a company based on the information that they had. Now, one part that's slightly untrue, any publicly traded company has to release at least quarterly financial statements. So at least once every 3 months, they have to tell you, this is where our money came from. This is what we're doing. And those statements have to be audited. So you have to have an auditor go in, check them out, say, it looks good. Our auditor's always right. Not 100% of the time, but we try our best. And they go in, say, it looks good. And so you get that idea. The next step up is earnings calls. So accompanying those quarterly statements, usually the CEO is going to be on the phone saying, hey, here's what happened. Here's what we think is going to happen next quarter. Here's what's going on. Financial analysts can ask them questions directly. They can say, have you thought about this? What about these pricing pieces there? And those they're officially available to join for any shareholder, but there's a lot of sites where you can just find them, track down those earnings calls, and anybody can listen to them. Again, that is you in the weeds doing the work. If you want to take it a step back, you can look at those financial analysts. Again, one of my favorites for seeing the different points of view is Morningstar.com. They don't pay me for anything, but they listen, they do the polls, they talk to the financial analysts. And from there, you can go back and go to the financial analysts and say, you think the share price is going to go to here, the earnings is going to go to here. Why do you think that? What's going on? Now, do they kind of have their own vested interest? Yeah. They bought into the stock, right? So they might hype something up if they have it, but very, very regulated. If they're hyping it up with lies, they will go to jail. They can kind of paint a picture, but we got to go in with that same skepticism. We got to go into the same skepticism as anything else. It's just more information. And it's telling you, where do I look next to learn about this company? Where do I look next to understand what is happening here? And those are the actuals, the fundamentals. That's what's driving, in theory, share price, driving dividends. There's outside factors too. And that's where it gets a little bit trickier of if people do get excited about a stock, if everybody's buying into a stock, that's going to make the share price go up. And we can ask ourselves, is that because there's something new about the company? So like the pandemic happened, everyone is buying into Zoom and Peloton. Well, yeah, that something happened. We think they're going to have a lot more business now that people are home more often. Something changed, something happened, and we need to respond to it. You as an investor have to think, well, is that good, bad? Is that the right reaction? What's going on? And as we're getting started looking to those analysts and thinking about, okay, are they lying to me or are they telling the truth here? What can I verify? What can I look into myself becomes a good step. A really funny one that I like, an analyst figured out they could get satellite pictures of this oil company who stored oil in barrels. So the barrels would go up and they were floating in water, and the barrels would go up and down in the water based on how full they were. So this analyst figured out how much oil is in how much volume did they actually do? They know what the price of oil is. So they accurately projected what their income was going to be before the quarterly statements came out. And now you got to ask yourself, well, are they lying? Is that legit? Can I look at it? Can they show me the evidence? Can they answer it? Can they show me, tell me what happened and prove it to me? Answer those questions. And in that case, I think, yeah, you can go verify it. You can see what happened. It's just using that brain and thinking things through, getting the information, thinking things through, and really asking, how am I getting paid back?
Yeah. So then let me ask you, we kind of talked about his Ponzi schemes. You talked about a couple of investments in the stock market, mutual funds. You touched on crypto a little bit. What are some other common, I guess, scams that or frauds that you're seeing that you, with your clients, are dealing with, and you're protecting your clients with?
Yeah. So probably the one that I see the most often, I wouldn't call it fraud because it's technically legal. It's a ripoff, but it's not fraud. A lot of it comes down to hidden fees and fees that are excessively high. So let me tell you about one. I'm not going to name the company for fear of getting sued, but it's a real estate company. And the way it works is you give them your house. They manage it for you. They will pay you the fees back and they'll put it in a pool with other houses, right? There's some bigger companies that do this. This was a very small one. They'll put it in a pool with other houses and give you back some of those fees or some of the rents that you're charging. So give them the house, you get the rents. I looked through the contract for my client and I went page by page, finding all of the fees that they paid. This company charged 12% per year in fees. Now, quick math, that means over 8 years, the value of your house is now zero because you've paid so much of it in fees. The other thing that happened, a lot of these fees, not all of them, came out of the principal, came out of the value of the house, not out of the rent proceeds. So what will likely happen to a lot of their customers, they'll get that revenue stream, they'll get the rents coming in. And then when they go to sell the house because they need the money or because they passed away and their kids want the cash, the company's going to say, well, sorry, it's these fees that you owe us. You have to pay those back to us. You're only going to get 10% of the value of the house. You're only going to get a small portion of the value of the house. The rest goes to pay us. Now, when I called up that company with my client on the phone, I said, hey, you guys are paying 12% in fees. This is outrageous. He says, no, that's not true. That's not true at all. No, we would never. That's a really high amount in fees. And he says, well, let's look on the contract. And I went down the contract, looking at all the different pages where all the different fees were listed. And I say, well, how do you say that that's not 12%? He says, oh, well, those aren't fees. Those are expenses. Those are expenses that you're listing. And I said, well, does the client have to pay them? He says, well, yeah, the client has to pay them. Okay, well, anytime money's flying out of my client's pocket, let's just call that under the umbrella of fees. Let's just call that there. So a lack of transparency and people getting into investments without understanding the fees or what they're getting into. And that was a very extreme example, but I see a lot of folks getting sold on life insurance. They got no business being in a whole life policy. Can that work? Can it make sense? Sure. Are the fees astronomically high? Also, yes. So you have to decide, are those high fees worth what I'm getting? What is happening in exchange for it? And again, every single time, how are you getting paid? Ask the salesperson, how do you get paid for something like life insurance? I would ask straight up, how much are you going to make off of this deal? If I sign this contract, how much are you going to make? And I guarantee you for life insurance, if they answer the question, that's a big if they answer the question, it's going to make you think twice about it.
So then kind of, let me ask you, what are some common things that you see, that you notice that are common no matter what the industry is, but like in scams or frauds in general? What is like a common thing across all of them that you could just tell no matter what you're trying to invest in, no matter where you're trying to put your money in, you could kind of easily just say like, this is a fraud, I'm out?
The easiest, see, a lot of this comes from experience. A lot of it comes from knowing the next question to ask. And one thing that I've done for my clients is I give them a script and I say, if you answer this, they're going to respond with this, and then ask this and they're going to respond with this. And knowing what they're not saying, you got to know what they're not saying is the key. And usually that is, they're either understating the risk. So the investment is riskier than they're leading you to believe. They're understating the fees, or they just do not have a plan to pay you. Usually those are the things. So you have to listen for not what they're saying, but listen for what they're not saying and own in on that. Ask questions about that, because that is what they're good at. They're good at dancing around those issues. And so in particular, those three things. What are my risks? What are the risks to me? What could happen to me? What could happen? I'm not asking you what's probably going to happen. I'm asking you what could happen. And if they go back to, well, probably, or under our projections, or most of our clients, go in and say, what's my worst case scenario here? What's the worst case scenario? That answers the risk. Expenses. How do you get paid? How are all the ways that you get compensated? Any regulated financial investment has to tell you. Now, most of these scams are not regulated because they don't want to tell you. They're operating under the radar. So another red flag, not all unregistered investments are scams, but it's just one of many red flags. But if you can't get a clear statement of what your fees and expenses are and where they come from and how you pay them, at a minimum, it's a ripoff. And then number three, how are you going to pay me back? Where does the money come from? And if they say, well, that's just how investing works, or you don't understand, or, oh, come on, that's how the stock, you mean to say you understand how the stock market works? It's a lie. It's a misdirection. How are you going to pay me back? Where's the money coming from? And those three pieces are what you have to listen for them not saying.
Amazing. So we kind of touched upon what's a Ponzi scheme, and we looked into frauds in mutual funds, stocks, cryptos, just general scripts that you should use to protect yourself and look out for. Robert, where can my listeners get in touch with you? Where can we find out more about this so that we're protected in this industry where everything's online and it's almost getting harder and harder nowadays to kind of distinguish what's real, what's not, what's a good investment, what's not? How could we get in touch with you? How could we find you so we can stay up to date and make sure we're not getting screwed over?
Best way, my website, delagify.com, DELAGIFY. There, you can find more resources. You can check me out. You can go and look at my investor profile, my SEC, my state registration as an investment advisor. I'm not SEC registered, I'm state registered. My state registration as an investment advisor. You can go to find those extra pieces of information about me, but find the resources on how to protect yourself and what's there. Again, delagify.com, DELAGIFY.com.
Amazing. And now it's time for my favorite segment of the podcast, Final Four Questions, how we end every episode. Question number 1, what is the most impactful lesson you learned in life?
The most impactful lesson that I've learned was don't be afraid to ask why. Don't be afraid of what people think about you. And if you are embarrassed to ask a question, or if you think that it's a dumb question, don't worry about it. Just do it, because that is the biggest barrier to knowledge. And it's the biggest barrier to really uncovering the truth. Don't be afraid to look stupid or look like a jerk because you're asking the right questions.
What is the most admirable trait a person can have?
It's integrity, and it's doing the right thing, even though you're not going to get caught. And I think that's so true of, if there's no consequence to doing the wrong thing, do you do the right thing anyway? You should always do the right thing.
That's a very philosophical question. Okay. If you had to change someone's life with one book, which book would you recommend?
That is the illustrated the illustrated book of bad arguments. It talks about how we can be tricked by deceptive language, how we can fall for things that sound right, but in reality aren't.
And what is the legacy that you're trying to leave behind?
I just want somebody to have a terrible day because they tried to rip off the wrong person. I want to ruin a fraudster's day. I want them to see my picture and cower in fear, knowing that they're about to be exposed. That's what I want.
That's amazing legacy to leave behind. And there's definitely a ton of people that you're going to help in the process of achieving it. So, Robert, I had an honor and I had a privilege, losing my words here. I had an amazing time trying to listen to your story and figure out what could I look out for now in my life, because they're getting more and more prevalent. Like you get random text messages from this guy or that guy, or random DMs everywhere here, left and right, people asking for money. So this episode is definitely needed, especially as social media becomes more and more popular than it already is, right? And so thanks again for hopping on and just sharing your story, sharing your wisdom, sharing your experiences, and just helping us, equip ourselves with some tools to make sure that you were able to go on throughout the day and not get screwed over, at least have a better chance of not getting screwed over.
There you go. Well, thanks.